heading into a period of time where things are going to get really crazy. Look, Rick Rule, a friend of mine, will tell you that from the Harvard Endowment Fund down to Joe and Jane Sixpack, the allocation of precious metals to the American public is 0.5%. And I think there will be things that will wake people up as we head closer to the election, as we head closer to the big BRICS meeting in October and the election a month later.
It was at 26% in 1981. Sorry, didn't mean to cut you off.
Well, and that would be a 12-fold increase, right? So, you know, what happens when that happens?
Andy, thanks for coming on the show, man.
Andy, great to be here. I appreciate it. And thanks for the opportunity.
So, Andy, for people who may not know who you are, this is your first time on the show. Give us a little rundown. What got you into investing? What got you into gold and silver? Who are you? Floor is yours.
Yeah, well, that's a good question to ask, because not as much who I am, but the way I look at gold. I started this company with my father 35 years ago in February, 34 and a half years ago, on a wing and a prayer. We're the most unlikely cast of characters to have got to where we are. We just recently eclipsed 10 billion in sales without a customer complaint. My dad's middle name is Miles, and his best friend, who lent us $60,000 in 1989 before the internet to start this company, his middle name was Franklin. We paid him off a couple of years later, and you know, in a one-room office we started, the size of a closet, with the hope of building something, which, you know, I look back at it and I can't even believe we were able to accomplish what we did, sending out hard copy newsletters, sticking them in an envelope, putting a stamp on it and a label. We would buy lists from guys like Doug Casey and Gary North way back when. But it's important to go back to that point, because my parents sold their life insurance policies and borrowed 60 grand from a friend to do something that we believed in. My father said to me, you know, I'm not going to let you make the same mistakes that I made. And so there's only one rule for you to start this company with me. And I said, all right, what's that one rule? He said, you will buy something every 2 weeks when we get paid. Every 2 weeks, you will buy something, some form of gold or silver, or I'll fire you. All right, if that's the only rule, Dad, I can deal with it. And I've owned the company pretty much outright for 2 decades. He's still alive. He's still my partner, so to speak. He hasn't worked for at least 2 decades. But I've honored my promise to him, and it was the best gift that anyone has ever given me. It was the gift of paying myself first and understanding the laws of compounding and having them work for me instead of against me. I have never, ever missed a 2-week period in 34 years, ever, in buying something for myself. So when I look at gold and silver, to me, it is the furthest thing in the world from an investment, albeit I understand the value. I watch it closely. I see its performance. In essence, gold has outperformed just about anything with the exception of Bitcoin since 2000. Not even close. It's outperformed everything. Going even back past that. You know, in 2000, it was $250. It's up 9-fold. But I don't look at it that way. I look at it as wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic. It's wealth that I have accumulated in a regimented style, very methodically. And the laws of compounding working for you instead of against you is something that should be taught to every kid in junior high school. It's the best gift I've ever been given. So when we talk about gold and silver in this discussion, please understand, to me, it is not an investment. It's not something you buy to become wealthy. It is wealth, and has been since biblical times. You know, the kings and pharaohs never called their gold dealer and said, hey, I want to buy some gold. They owned it as a form of immutable wealth, that if they had to spend it, they were damn glad they had it for whatever reason. Maybe it's an opportunity, not just an emergency. And if not, there are very few things that you can pass on to your children or your grandchildren or your nieces or your nephews, or even give to a church or whatever you want in terms of passing a legacy on, that will have immutable wealth in the year 3000, long after the dollar bills in our wallet, which we call money, are hanging from a frame in the Smithsonian as an example of what used to be. So to me, as we go through this, that is what or how I look at it. And here we are 30, almost 35 years later, doing 10 billion in sales, never having a customer complaint, US Mint authorized resellers. It's been a wonderful ride. And I get up every morning and I look forward to doing what I do. I do these YouTube videos. It started in 2020 kind of on a lark, but it's something I feel very strongly about. And I put myself out there and I subject myself to critique and criticism. And I wonder sometimes why I do it, albeit it's a labor of love. And I just want, I think it's unusual that a lot of people will, not a lot, but there are people who don't understand the concept of building a business and yet doing something in a noble endeavor, not talking my book, but rather trying to get information out that I have spent hours every single day for the last 4 years researching a trend that I see, a trend that is happening to the dollar, to the petrodollar status, and how gold and silver play into all of this. So do understand it's something that is very important to me. It's something I take very seriously. Every single person who comes to work at Miles Franklin, I tell them the same thing my father told me: buy something every 2 weeks or don't take this job. And every single one of them has come back to me and said, I love you. Thank you so much. It's the best gift I've ever been given, because none of us learn to save. Whether you're working out or dieting or doing anything that you need to become good at, you have to be regimented and methodical. And paying ourselves first, to me, is the best advice I could give any young person starting out. If you don't pay yourself first, it's like anything. You wake up one day and you're like, where'd all the time go? And I've been trying to keep up with the Joneses and I have nothing. And that happens. And where 55, 60% of the country is paycheck to paycheck, even 45% of people in this country earning over 6 figures, paycheck to paycheck. So as we continue with your questions and go on with this interview and making an introduction to people here, I will just simply tell you, the best advice I could give anyone is to start and be regimented on, I don't care if it's a $10 bill in a jar or an ounce of silver or whatever it is, pay yourself first always. And that is the only way to get ahead. And that's who I am. And that's where I come from. And I guess I would say amongst the least likely cast of characters to have ever achieved the success that we have. And it's something I take very seriously, and glad to be here and be able to talk to you and others out there about what's going on in this world. And because I think it's about to get pretty interesting.
Yeah, and paying yourself through buying gold. I mean, you just shouted out the statistics right there. 6-figure incomes or living paycheck to paycheck. Now, 20 years ago, that would not have been the case, but that is a byproduct of fiat currency diminishing in value over time. You look at
Absolutely.
a chart of gold, it consistently, I mean, there's ups and downs, obviously, but if you zoom out properly, it's essentially a move from bottom left to top right.
Yep.
And that's not gold going up in value. It's just your fiat currency is going down in value. So when you say pay yourself, you're really saying that preserve your wealth in a sense to not, kind of depreciate alongside the fiat currencies. Let's kind of zoom out and start things off on the macro scale and then gradually zoom in, Andy.
Sure.
So what is kind of like your 60,000 foot view of the markets at the moment? There's all sorts of things happening. As of the time of this recording, oil's been dropping precipitously down to the lower $70 range. What's going on?
My view of the markets right now, in essence, is that we are really kind of at a crossroads. We're near a Rubicon. And I guess we can start by, since you brought up oil, to me, that's really the linchpin of everything that's happening. I ask people often, what makes the dollar the world reserve currency? And very few people know the answer to that question. And, prior to, right after World War II, we signed an agreement called the Bretton Woods Agreement, where we became the world reserve currency, taking over for the pound sterling. And at the time, the promise was to other governments, hey, we will honor a fixed rate of gold at $35 an ounce. So you take our dollars, and anytime you want to exchange them into gold, it'll be at $35 an ounce, fixed. And it was that way until 1971, when President de Gaulle from France largely realized that we were printing more dollars than we had backed gold backing it in Fort Knox, the Treasury, and he sent warships over to New York Harbor filled with dollars, saying, "Give us our dollars. You're creating more money to fund the Vietnam War. We want our gold." And we did. We gave him largely what he wanted, and at that point, Nixon closed the gold window because within a matter of weeks or less, all of the gold would have been gone. So he went back on our promise. The dollar was backed by nothing at that point. When it was a few years later in 1973 or 1974, rather, that in fact, it will be 50 years in a few days, 5 days, I believe it's 50 years, that we signed, 50 years ago, we signed the Petro agreement, Kissinger did, with the Saudis. And the agreement was, we will protect you, and for that protection, you and OPEC will value oil in dollars globally, and the proceeds or any excess will go into U.S. treasuries. Recycle your excess into treasuries. And it's been that way for 50 years. And it has created a synthetic demand for the dollar where every single country in the world has had to stockpile dollars. And I think that trend is nearing an end. And the ramifications of this, I believe, is being vastly underestimated by the public, by the elite, by the economists, by everybody. And a lot of things have happened over the last couple of years that is pushing this trend, accelerating it to the point where I think we are very, very close to ultimately losing the petro status. You could argue we've already lost our hegemony. We have not lost our supremacy, but we have lost our hegemony. And when you realize that the one thing that makes the dollar really is our relationship with Saudi Arabia, probably the dumbest thing that you could do would be to sign an executive order to go green. And that is exactly what Biden did when he came into office. He signed an executive order to go green, but I think it's also relevant to note that the lead economic advisor for the United States government is a bonehead named Jared Bernstein. And a lot of people have seen his interview on Twitter recently, where he was trying to explain how the U.S. sells bonds and uses the proceeds to fund its debt. And he couldn't even get 3 words out of his mouth. That was really embarrassing. But this is a man whose main thesis is to lose the dollar's reserve status, that he's written reports on it called Dethrone King Dollar, picked up in the New York Times. When Trump slapped tariffs on China, he said, great, we'll lose our reserve status now, hopefully. That was picked up in the Washington Post. He's the lead economic advisor to the U.S. government. So if indeed you do want to lose the petro status because it creates distortions and economic imbalances, as he claims, the first thing you would do would be to say to the Saudis, hey guys, thanks for the memories, it's been great. So much so that the Crown Prince of Saudi Arabia recently came out and said, China was our most important trading partner in 2023 and will be for the next 50 years. Those numbers were chosen, or those words were chosen very specifically. In 5 days, it marks the 50-year anniversary of our petrodollar status. But we're going green, right? Well, to make that worse, let's weaponize the dollar. Let's tell Russia that we don't like what you're doing, and we're the world reserve currency. Now, one would argue, I would, that as the world reserve currency, it is not your prerogative to say who can and can't use it. And the world looks at us these days as being very hypocritical. I'll give you an example. Janet Yellen says to CNBC recently, and I'm directing this at China, basically, is what she was saying, that if Beijing, we're okay with you being friends with Russia. Well, thank you very much, Madam Secretary. That's benevolent of you. Even though that you're partners in the BRICS, we're okay with you being friends. But if you give 1 penny to the Russian war machine, we will sanction your banks, your companies, and even Beijing itself. Never mind the fact that we've given $200 billion to the Ukraine without any congressional oversight. We're the world reserve currency. We can do that. Or we invaded Iraq 20 years ago, and supposedly under the guise of weapons of mass destruction. Oops, sorry, didn't find them, but we're still here. And in fact, we're going to topple your regime, put in a new government. But guess what? We're still here. And we're sanctioning 14 of your banks for having the audacity of trying to buy liquid natural gas from Iran and going through their banks. So 14 of the Iraqi banks are sanctioned. And they made $90 billion in oil revenue in 2023. The Iraqis did. And yet they're not even allowed to control their natural resource proceeds. It's held at the New York Fed. And towards the end of the year, they said to the US, can we please have $1 billion of our $90 billion that we made? No, it's not a good time, we said. So what did Iraq do? They're in the process of kicking Western coalition forces out of the country right now. They've made trading in dollars illegal. If you own a business and trade in dollars, you will wind up in prison and they will take your company. As of January 1st, 6 months ago, all green bills of any denomination, dollars, have been taken out of the banks. There are no more bills in there, and they have formally applied to the BRICS. So you see, my point I'm trying to make is that a lot of the Southern Hemisphere views us as being wholly hypocritical. And it's one thing to sanction and freeze assets. It's a whole nother thing to confiscate those assets. 5 billion of the 280 billion that they want to confiscate or they have frozen, the Russian assets are in the United States. They want to use those 5 billion in dollars to provide weapons to the Ukraine. The other 280 billion that's being floated around that will take the interest of those frozen treasuries, about 4 or 5 billion a year, and use those to rebuild the Ukraine and provide weapons against the country they are fighting. Now, I see a problem with this. Look, I'm an American patriot. I grew up in this country, and as I mentioned, the least likely character to have ever achieved the success. I thank God every day for this country and the opportunities it gave me. But the leaders of this country are doing some very dumb things, and in particular, signing an executive order to go green, undermining the hegemony of the dollar, weaponizing the dollar. And all of this really came to a head before all of this started when we left Afghanistan in a way that was very much un-American, leaving, 3,000 American people behind enemy lines and turning our back on the interpreters and the freedom fighters who we gave them a promise, we'll give you visas on the way out, and we didn't. This was not lost on the rest of the world because 2 days after that happened, Saudi Arabia signed a military protection agreement with Russia. Now, keep in mind, we've been protecting them for 50 years, and that's what's given us the dollar hegemony. They decided to do it with Russia. What else has Saudi Arabia done? Well, they have formally applied to the Shanghai Cooperation Organization, which is the largest regional and military and financial organization on the planet. They've formally applied and have been admitted into the BRICS. They've told people in Davos that we're open to taking other currencies for oil. You can see things are breaking away from all of this. And look, if it were just the mismanagement of the dollar globally, I think we'd be okay. Let's bring it home for a minute. And all of this comes into your question because it's important to look at this from a whole perspective, right? I think the markets are manipulated. There are no free markets. There's just manipulations right now, but this will end badly. And I'll tell you why. So it took 200 years to create our first $1 trillion. We're doing it every 100 days. Every 100 days, we're adding $1 trillion in debt. We have a almost $35 trillion debt, but that doesn't take into account Medicare Part B, 99 trillion underfunded. Medicare Part D, the prescription, 22 trillion. Social Security, 77 trillion. Government and military pensions add up to about 150 or $60 trillion in the hole. And 1 trillion seconds ago, 31,688 years ago. Game's over. So it's bad enough we've done all of this stuff. We could probably figure out a way to get out of this. But, people look to the United States and have for a very long time as a beacon of liberty and justice and freedom, a shining light, if you will, right? Well, let's talk about that for a minute. How about the questions regarding our electoral process? I don't care what side of the aisle you're on. Is it fair? How about the judicial system? I don't care what side of the aisle you're on. Is it fair? Is there a two-tier standard of justice? Is justice blind? How about the lawlessness in the cities, the open borders where 17 million people have entered this country illegally? If 1% want to fuck with this country, that's 170,000 people. How about 5%? Well, you're getting up real high there. At 5%, you're talking what, 800,000 people? That's bigger than any standing military. How about the fact that we've lost our bearing in terms of being woke, in terms of moving away from the nuclear family? All of these things that made this country great, people are looking at cross-eyed. And so if you really did want to lose the reserve status, as Jared Bernstein advocates for, the lead economic advisor to this country, well, let's see. Sign an executive order to go green, weaponize the dollar against Russia, against Iran, and no one in the world, let alone the Southern Hemisphere, will ever trust us again as we confiscate their assets in a hypocritical manner. And then we let this country lose its bearings, the borders, the cities, the lawlessness, the inflation, the two-tiered justice system, the questions surrounding the electoral system. All of this stuff makes people in this country say, what the hell is going on? And the rest of the world saying, this is our chance. And what I mean by that is we now have the BRICS, right? And this is what I've been talking about since 2019, long before anyone did. Everyone thought I was crazy in 2019 when I started talking about this. You now have 10 countries in the BRICS fold, including Saudi Arabia and the United Arab Emirates. You have 2 of the 3 largest nuclear arsenals on the planet right now. You have a larger swath of human population, a larger swath of global GDP, the majority of the shipping lanes in the Middle East, the majority of the rare earth metals all on the Eurasian continent, the majority of the oil production in the world, and another 25 have informally applied. When you add in the Belt Road Initiative, which has every single OPEC country on the Belt Road, let me say that one more time, every single OPEC country on the Belt Road. It's China's, it's like the Silk Road redone, Silk Road 2.0, connecting Asia, Africa, parts of Europe and South America. It's the largest infrastructure project in human history. When you add that with the Shanghai Cooperation Organization and the Eurasian Economic Union, they're all the same countries, you're talking 90% of human population. You're talking a way bigger military might, much more GDP, all of the world's commodities, all the shipping lanes. This is not something to take for granted. And the rest of the world is, or at least the West is, taking this for granted. So when you ask me, where are we? Doesn't matter where we are. I look at the macro deal. And now, could this happen? What's the downfall of all of this happening? What happens when Saudi Arabia says, listen, we've decided to no longer take dollars for oil? Rumor is that they may make this announcement in 5 days. John Little from the Pickaxe Substack says in 5 days, they've already informed the West they're not taking dollars anymore. The United Arab Emirates already said, we will not take dollars for oil anymore. They are the 5th largest producer of oil in the world. They are an OPEC member. They did just join the BRICS. What would happen if they said, listen, you guys, we thank you for everything, but we're not going to take dollars for oil anymore. You said you're going green yourselves, and you got this unmanageable debt. You're creating $1 trillion of debt every 100 days. Your bond market has been unstable. And if we don't align ideologically with you, you're going to confiscate our funds. We're going to take something else. So maybe it's the new BRICS currency that they are working on. What they have been doing in the meantime is trading in local currencies and settling the excess in gold, and we can get into that. But if that happens, this is your Klaus Schwab moment. This is where everything like that blows up. How? Well, and why? And I'm sorry to go on so long, but I just want to paint the picture, and then we'll go from there. This is the way I look at the world. Why and how? Well, if every single country in the world has had to stockpile dollars for the last 50 years in order to buy oil, what happens if they don't anymore? And they all dump dollars immediately. Buy anything they can, sell dollars, go into the Forex and dump dollars. Those dollars overwhelm the issuer. That's us. And it creates hyperinflation as that tsunami of inflation goes across the ocean, hits the dollar. Now, what happens when you have hyperinflation just like that? You have to have interest rates that rise, not created by Powell and the Fed, pussyfooting to 5% and then freaking out because the whole banking system starts to collapse. But how about when the market says, no. If you guys really have 30% inflation, you can't have 5% interest rates. Your currency's dead. So interest rates spike to 30%. This is what Jared Bernstein wants. What happens? Well, let's start with the banks. They're massively over-leveraged and undercapitalized. Poof. Let's talk about the insurance companies. Loaded with 90% probably in treasuries. Poof. What happens to the stock market, the bond market, the real estate market? All inversely correlated to a spike in interest rates. Poof. Everything, the dollar, the banks, the insurance companies, real estate, the bond market, and the stock market all collapse like that. Now, why would we do that? A lot of people will tell you we are at a point right now where you have 2 choices if you're the Federal Reserve: inflate or default, inflate or die. Richard Russell, my mentor, used to say that 20 years ago when the Fed had a $15 trillion debt, let alone 34 trillion and 150 in unfunded liabilities. So if they make that statement and this happens, you now have option number 3. You found a villain. Those sons of bitches, Xi Jinping, Putin, and OPEC, how could they do it to us? Forget about the fact that we've incentivized them to do this by weaponizing the dollar and telling them that we're going green and then letting our country fall apart and creating $1 trillion in debt every 100 days. Forget about all that. What happens? Well, it's chaos in a matter of hours. And so I do believe, no matter what the micro perspective is in the markets, that we are at a crossroads. And if this happens, everything resets. Now, but why would they do it, right? Well, 34 trillion plus 155, 160 trillion, we're 200 trillion in the hole. You'll never pay that off, ever. So you reset. And the interesting thing about it is, look at all the unfunded liabilities: Medicare, Medicaid, Social Security, government, military, pensions. Who's that owed to? Us. Who's been selling all the treasuries over the last year and a half? China, Japan, Saudi Arabia, Russia. All of the countries around the world are dumping treasuries. Who's been buying the treasuries? That's us again. The hedge funds, the money markets, the mutual funds, everyone leaving the banks, chasing yield, buying treasuries. Roughly only 20-25% of the debt is owed to foreigners. So if you reset the system, as Klaus Schwab said, how do you do it? How do you usher in a CBDC? Well, guess what? The number 2 economic advisor to the government is Lael Brainerd, modern monetary theorist, worked at the Treasury, spent half a year under Powell as vice chair at the Fed. If Biden were to win again, she will be the head of the Federal Reserve. Guaranteed. Modern monetary theorist, worked with MIT in development of the new CBDC, ushered in about 6 months ago, ran point on FedNow, which is Venmo and Zelle on steroids backed by the Fed. It's being piloted right now by a handful of banks. It will get rid of checks and wires instantly. She wants this to happen. She's a modern monetary theorist. But how do you get people to take a CBDC and how do you reset the system without falling on the sword for creating endless amounts of money and brain dead monetary policy and fiscal irresponsibility? You find a villain. You don't default, you don't inflate, you make them do it to us. You reset the system and all of the debt, 80% of it's owed to us. So you say, listen, Danny, I know you just lost everything, man. Sign on the dotted line and we will make you whole. Take the CBDC and we start over. Now, everything I have said up to this point is fact. Is the actual crossing the line and letting things blow up, incentivizing it? Well, that's supposition. But I will say to you, when you ask me, where are we in the markets? To me, it doesn't matter. I would simply say, if you are not a contrarian, you'll be a victim. If you hold everything in dollars or dollar-based assets, you will go broke. And I never felt this way. But when you look at the things that are happening in this country, you have to ask yourself, what the hell is going on? Have we lost our mind? Or are we trying to incentivize the world to do this, to move away from the dollar, to find our villain, instead of falling on the sword for destroying the American dream and the American way of life? Now, I hope I'm wrong, but ask yourself, how the hell do you pull up from a nosedive where you have 200 trillion in debt and no manufacturing base and rising inflation and lost our trust around the globe by weaponizing the dollar and confiscating assets, when the rest of the world, or much of it, looks at us as being hypocritical? So where are we? I don't know, man. I don't even look at the micro. I look at the big picture. And to me, it's not about return on your money. It's about return of. And I think that's the most important thing at this point. Sorry for being so long-winded, by the way.
No, this was great. Fantastic. So essentially, you've got the domestic dollar within the borders of the United States, but then you've also got the international dollar. So you've got 2 different dollars. So once we unpeg away from this petrodollar, all that money from all of those international, or let's call them Eurodollars, come flooding back in to the United States. And there's way more of those than there are of the dollars that are within the United States.
Way more, because every country's had to accumulate them for 50 years to buy oil. That's right.
Yeah. So with this coming reset, with the BRICS aligning with OPEC the way that they are, what would they do another global reserve currency? Would they allow for the formation of another global reserve currency, given how badly the United States has demonstrated that it can be abused? In a sense, would the RMB be the world reserve currency? Would the Russian ruble, or would it be something backed by gold?
Well, first of all, that's a good question. First of all, let's look at what's been happening so far. So we go back to the August meeting in Johannesburg, and in the BRICS, the chairmanship or the presidency chairmanship rotates each year. Last year it was in South Africa. This year it's in Russia. And a lot of people, James Rickards, who I'm friendly with, I had the good fortune of talking to him about this last July in person down here at Rick Rule's conference in Boca. And he was under the impression that they would issue a common settlement currency. And I use the word specifically, or settlement currency, in August. Last year, they didn't. He also said a couple things that I've been saying for 3 years, that the Eurasian Economic Union, which are all the former Russian countries that end in STAN, and the Shanghai Cooperation Organization, the largest financial and regional financial and military organization on the planet, that they're going to join the BRICS. In fact, the president of Belarus just called for a summit to do just that. They're going to join. Neither of these things happened in August. But what did happen was that they said, listen, we need to go back to the drawing board. And I want you to bring all your finance ministers back to the meeting in October, this coming October in Russia, present your findings on a common settlement currency. In the meantime, we want to trade in local currencies with one another and settle things that way. So if you realize that Sergei Glaziev, who was the Russian finance minister that for 3 years said that they will have a common settlement currency, and it will be pegged to a basket of commodities and a basket of currencies of the countries that are involved. Understand this, first and foremost, that I believe the commodities he's talking about largely is gold. And the reason I say that is that in 2019, the Bank of International Settlements, which is the most powerful bank in the world, the central bank or central bank, reclassified gold as the only tier 1 reserve asset next to U.S. Treasuries, the only other one. It's been for 75 years, basically, U.S. dollars and treasuries were tier 1 asset for a central bank, riskless. Gold, out of the blue, is also tier 1. And if you look at the amount of gold that the central banks have been buying largely since 2017 quietly, and then repatriating their gold, like the Bank of India just repatriated all their gold from the Bank of England. All of Saudi Arabia just repatriated all their gold from the New York Fed, as did several African countries, as did the Bundesbank of Germany, the Dutch National Bank, the Bank of Austria, Poland, Hungary, Turkey, the Czech Bank. They all repatriated their gold, and they have been buying more gold as a group over the last 3 years than any time in central bank history. Coincidence? I don't know. It's the only other tier 1 asset in the world, as according to the BIS, the most powerful bank in the world. Sergei Glaziev said it will be backed by gold or commodities, this new currency. So I believe what they are doing is simply this. What they have been doing is you get Russia trading with, let's say, India for oil, and they take rupee. And then they take the excess rupee and they'll end up buying gold or commodities with it. Saudi Arabia has been trading with China, selling oil and getting yuan, which is immediately convertible into gold in the Shanghai Gold Exchange, kilo bars. You look at Brazil, they're selling, they're the second largest exporter of corn in the world. They are only dealing in yuan now, and they canceled contracts with the United States, as did China. Just canceled huge wheat contracts with Australia and the United States, buying them from Russia and paying for it in yuan, which is immediately convertible into what? The only other tier 1 asset in the world on the Shanghai Gold Exchange, as is Brazil with corn and soybeans. So what they have done, first and foremost, over the last year is sell treasuries and buy gold to replace treasuries. You go back to the year 2000. Treasury market's been really, since 2000, hasn't done much at all with the low interest rates, right? But if you look at what gold has done, it's up 900%. It's way outperformed the bond market. It's outperformed the stock market. It's outperformed the S&P. It's averaged 9.5% or so per year compounding. The S&P like 7.5%, 8%, even with reinvestment of dividends. And so when you talk about the performance of the bond market, it's way outperformed the gold market. But what does it have? It has a gold is an asset that simultaneously carries no counterparty liability. It can't be defaulted on. It can't be sanctioned or stolen. So they are selling treasuries and if you look at the treasury holdings, China's down to 700 billion. They were at 3 trillion. They're selling treasuries slowly, not too fast to spike rates and to cut off their nose to spite their face, but fast enough, or slowly enough rather, to to accumulate commodities across the board, which they view, I think, commodities have a greater value than currency at this point. Zoltan Pozsar, who used to be at the Fed, is a very smart man, said we are now in Bretton Woods 3. Remember Bretton Woods 1 when we became the pound sterling, took over for the pound sterling. Bretton Woods 2 loosely when we became the petrodollar. Bretton Woods 3, he says, is a system that will be defined by transparency, a la blockchain, and commodities, a la gold. And that's what these countries are doing. Now, we will find out which of the 36 countries are going to be admitted that have formally applied. And I think what they're waiting for is to have mass, a large enough mass where, to your point, if, let's say we have a BRICS settlement currency, and to me, gold, see, right now, the settlement and all of these deals, like Iran just did a deal with China to modernize their biggest airport, worth several $billion they're paying for it in oil. All of these things would have settled in dollars, and excess reserves would have gone into treasuries. Chipping away at the settlement status of the dollar is all of these countries using their local currencies to do transactions. Chipping away at the reserve status of the dollar is the shedding of treasuries, which is the reserve, and buying gold instead of treasuries. So you're chipping away both at the reserve and the settlement and the reserve status of the dollar. So what they're waiting for is this. If you have enough countries, let's say you have 50 countries that represent 75% of GDP, the majority of human population, all this stuff, you can trade and get the BRICS settlement currency with whichever country you do business with. But then if you want to buy something, if you, instead of taking rupee and having to deal with India, you can get the BRICS settlement currency and buy whatever you want from any of the 50 countries that have goods and services to sell. And then the proceeds, the excess reserves, are piled into gold, at least for now, until they issue or have a vibrant enough bond market. That's a long ways away. It won't be the rupee, it won't be the yuan, it won't be any of these single currencies that will be a reserve currency. But what it will be is a common settlement currency that has the potential to morph into a reserve currency. And in the meantime, they will take commodities that will replace treasuries, which can be weaponized. And that's where I think we're heading. So do I think that there will be a common settlement currency, common reserve currency? Yes, over time there will be. But, you know, at this point right now, we're not there. But the settling in local currencies and the buying of gold instead of treasuries is chipping away at the dollar hegemony little by little for sure.
Yeah. So it kind of begs the question, if these central banks are all loading up on gold, and they have been loading up on gold for the past decade, every single year they've been adding more and more to their pile. It kind of makes sense for the individual to kind of view themselves as their own country and have some sort of gold and silver exposure. And that's where, you know, you guys come in at Miles Franklin. I've looked at SD bullion, I've looked at JM bullion, and, you know, the prices just don't compare to you guys. You guys are, you know, are able to beat all of their prices. You know, where can people find you, Andy? You know, for those that are interested in kind of building up their physical metals exposure, for those who may have already built it up, but they just want they just want to get better prices. They just want to form a better relationship with their gold dealer. Tell us more about your company.
Yeah, so we do have a website. We limit the amount we can put on the web or purchase on the website, and the prices we quote on the website are nowhere near as good as the price lists that we keep close to the vest. The best way for your listeners to check out our prices, which will be as good or better than just about anyone in the country, would be to send us an email at info@milesfranklin.com. And in the subject, well, first of all, they can ask any questions that they have at all, any at all. And in the subject line, they would put Capital Cosm in the subject line. Capital Cosm sent me, but ask any questions, whether it be anything you heard on this interview, questions on precious metals IRAs, anything, or you just want the price list. You want to be contacted, you don't want to be contacted. That's up to you. We're happy to do it, or respect your privacy. But by sending us that email, it will allow us to not only give you the best price, but also the best service if you want it. There's no obligation for requesting it. And you'll find that the prices that we keep close to the vest that we'll send out for your listeners will be worth their time of sending that email. And that's pretty much the best way to do it. But all of the people who work, the 14 brokers that we have are very distinguished. And I say that seriously. These are all my oldest friends in the world, all of them. I go back many, many, many years with just about every one of them. And before they worked for me, they were my friends since elementary school, many of them. And in and of themselves, they all have great backgrounds. Several of them worked on Wall Street, Wharton grads, the master's degree in business administration from Temple. All of them are capable of commenting on everything you've heard on this interview or anything that you have, geopolitical, macroeconomics, precious metals, you name it. And so we will be more than happy to reach out to you and answer your questions if you ask for it. But we feel that it's important because you never realize how important a relationship is until there's a problem. And I think we're heading into a period of time where things are going to get really crazy. Look, Rick Rule, a friend of mine, will tell you that from the Harvard Endowment Fund down to Joe and Jane Sixpack, the allocation of precious metals to the American public is 0.5%. And I think there will be things that will wake people up as we head closer to the election, as we head closer to the big BRICS meeting in October and the election a month later.
It was at 26% in 1981. Sorry, didn't mean to cut you off.
Well, and that would be a 12-fold increase, right? So, what happens when that happens? Relationships are very important. It's something that it's a model that we've used for 34 years and it's gone very, very well. So while we do have an online presence, we are more of a kind of a hybrid brokerage model, but you will not be disappointed. And you get customer service that is not, it's one of these things that's kind of slipping by the wayside in a very digital, impersonal world. We still maintain that. So send us an email, info@Miles Franklin. Capital Cosm sent me. Any questions you have, or just ask for the price list. We'll make it worth your while, I promise you. I'm sorry I monopolized so much time here. I know this is our first podcast, and I'd love to come back on as often as you'll have me. I don't care if it's every week, because as the Chinese curse says, may you live in interesting times. This is going to get interesting, truly. And that's a curse, by the way. But I wanted people to understand the way I look at the world. And this is way bigger than what are the markets doing today. We are on the cusp, I believe, of losing our reserve status, of losing our reputation. When you take a glass and throw it at the wall and it breaks into a million pieces, how do you ever put it back together? And I would make the analogy, that's the level of trust that we have shattered against much of the Southern Hemisphere, which is now uniting in safety and numbers under the BRICS flag. How do you build that back? And when you're talking nearly 200 trillion in debt, and a trillion seconds ago was 31,688 years ago, how do you pay that off? And when you have a federal government that's spending $1 trillion of debt every 100 days, how do you pay this off? And so we are entering a period of time where I think people need to look at the world a little bit differently. And I need to lay that out. Going forward, I won't go through all of this again for your listeners. But since I've been here only one time, I think it's important to understand just the way that I'm looking at things. And it's a pleasure and an honor to be here. And I hope to come back and pick up where we left off sometime real soon.
No, I mean, this stuff is decades, if not centuries, and if not a century in the making. So it's super important that the audience fully understands the chessboard, how we got here. And it takes a while to, it's a web. It's a web of different, interactions. So, the economy is very complex. I'm glad you came on here, Andy. We'll have you on, in the coming weeks ahead as well. Kind of get your updates on the gold market as we kind of move along. Gold and silver did a little bit of a pullback today, but in the greater scheme of things, I think we've still got much more to the story left. Many more innings to come.
Absolutely, I agree, and it's good. Yeah. The markets need to exhale too. It's been quite a rally, and
now's your chance. I mean, if you've been holding off on buying, I mean, you could view this as a gift.
I agree. I agree. I think, the best way to accumulate is methodically, but also buying on the dips is the best way to do it. Next time we talk, we should talk about what's going on in the silver market. The bullion banks all showing up at the Shanghai silver market. or the Shanghai Metals Exchange. There's lots to talk about there.
Yeah.
Lots to talk about of what's going on in COMEX and LBMA. Lots to talk about, but we had to lay the foundation here first today, and love to come back on and pick up where we left off real soon.
Yeah, I'll get together with your assistant and we'll set up a time sometime next week or the week after.
Look forward to that. I hope you and everyone else out there has a good rest of the week, and stay well. These are interesting times. So look forward to chatting with you again real soon.
Excellent. Well, hey, Andy, thanks so much for coming on. And if you enjoyed this content, please remember to hit the like button, subscribe to the channel if you haven't already. A small bit goes a long way. And if you want to support me monetarily, my Buy Me a Coffee link is down below. And with that said, you guys, I will see you in the next episode. Bye, y'all.